Has Bitcoin found a new purpose? Crypto enthusiasts seem to answer that, pointing to the meteoric surge in the OG token's price. But critics warn things could still go wrong. Take a look at our next report for more on this.
The concept of Bitcoin captivated the public immediately when it first gained attention in 2013. Its value skyrocketed in that year from $13 to $747. Bitcoin's nature as decentralized digital money that eliminates the need for intermediaries like banks made it famous. 12 years on, the world's best-known cryptocurrency has toppled $123,000. Tens of thousands of personal fortunes have made, some have lost as well along the way. But for all the talk of Bitcoin going mainstream, it never really threatened to displace regular currencies as a way to pay for groceries or buy a car. It has not gained any traction for even sending money across borders. That is a business arguably ripe for disruption, given the significant fees involved. The main reason why Bitcoin is still a thing has little to do with payments. What's pushed it to a new meteoric high is its embrace by mainstream finance as a supercharged alternative to stocks, bonds, real estate, and gold. A growing list of Bitcoin millionaires has made others hungry for some of the action. Now that has put investment advisors under pressure to offer their clients some exposure to the digital token. Big financial institutions are now offering Bitcoin exchange-traded funds. They're marketing the ETFs as a tool for investors to diversify their portfolios and hedge against inflation risk. This shift has received the U.S. government's blessing, thanks to a flurry of legislation pushed by pro-crypto President Donald Trump. Yet critics say mainstream finance's alliance with virtual currencies raises important questions. For example, how can bankers responsibly recommend an asset with no intrinsic value besides its scarcity? Even gold can be made into jewelry, and if Bitcoin's price is sustained solely by the hope that more people will buy it, what happens when the last financial institution willing to embrace it has done so? Critics argue FOMO, or the fear of missing out, is the main reason for Bitcoin's surge. They say Bitcoin owners don't receive the regular income or yield that comes from owning bonds or shares. The OG token's value comes from the fact that the supply is limited. Settlement of traders using Bitcoin can be slow during periods when its blockchain network gets congested. Its price is notoriously volatile. So it's hard to know exactly how many apples, shoes, or Lamborghinis your Bitcoin will get you from one week to the next. Traditional currencies don't tend to suffer the kinds of price swings seen with Bitcoin unless a nation is in a state of political or economic turmoil. Crypto enthusiasts say that is exactly where Bitcoin comes into play. Bitcoin's value today is derived from its perceived role as a macro hedge. More importantly, some of the biggest players in global finance are dabbling in Bitcoin today. While the debate between the naysayers and crypto enthusiasts continues, whether Bitcoin eventually displaces regular currencies will be a key theme in the coming months. Business Bureau, WION World is One.
For latest news, download the WION app and subscribe to our YouTube channel.